morning. Good morning, everyone. You
Good
have
morning.
Leisha Leslie and Andrew Giovinazzi. I almost said your name wrong. We don't have Mark this morning. He's out playing around on a boys' weekend.
He sure
I
is.
think, Andrew, I think every now and then you need to have a girls' or a guys' weekend.
You do. I don't seem to really get them anymore, but I think I had my limit when I was under 35.
I'm sure if something came up, Courtney would be like, "Yes, please go."
Yes, yeah. She would. But I think I did have position limit in my youth already.
Okay.
So there's not many boys' weekends where there's, I don't know. I guess, but.
Okay, so Andrew and I thought we would talk about our national debt because we have just paid over $1 trillion on our interest. And that's 30% higher than a year ago. Andrew, both Andrew and I try and beat the drum on please stop spending, please stop spending. No one gets it.
I don't think anybody is listening. And as I recall from the debate, although just, I don't think anybody mentioned it. And yet sitting in front of us were the two people, well, Harris with her part of because it's always been Harris Biden, right? Since time immemorial, right? We've got that. And then Trump, and between the two of them, they're responsible for more debt than ever in this country, between the two of them. Although by the end of Joe's term, I think he might win. He might actually hold that mantle as his title for Bidenomics will end up being, I spent the most, but got the least amount of economic growth.
Right. So in a time when we think it's a major, major thing, like you say, they're not even talking about it. And both of them are the biggest spenders. That doesn't bode well for the future.
No, and I think might be part of the reason why you didn't get a lot of market movement after the debate. You could be Trump fan, Kamala, whatever. But I think honestly, probably Kamala did better because she didn't have to do that well. And just because, I think she showed a little better than people expected, and Trump probably a little worse than people expected. So of course everybody's going to go crazy in the comments about that. But I mean, I think that's the reality. And you see where, polling was afterward and whatever. But
that was the overall consensus. Yes.
Yeah. But I think, but between the two of them, you're not hearing anything. Now, the only thing I have heard was out of Donald Trump saying, hey, maybe we can get Elon Musk, to do for the federal government what he did for Twitter. Like, Twitter still works with 90% less people. I'm pretty sure the federal government would work. We don't need any more regulations. And how about, let's just start by axing 50% of just about.
Well, how about all the jobs reports every month on the jobs reports? Oh, it went to new government hiring and healthcare hiring every month. How many people do you need out there?
I don't know, but we're we're on our soapbox of this.
Yes.
The only thing is the U.S. can stop spending if they wanted to, which of course would bring down rates and everything else. And I guess at some point the bond market will press. I think part of rates going up was the bond market was going to start demanding higher rates anyway, right? There's no way you're going to have whatever inflation rates we were having at the time with, 1% interest. It just wasn't going to happen. So the Fed moved in response, but of course, they were slow everywhere else. So we have what we have, yet stocks still want to go up. And I think like the biggest thing that people forget, you don't hear about from politicians, is it's hard to kill the U.S. economy and stock market. Like you gotta work at it. So
Thank goodness, right?
like COVID, they finally came up with a solution,
Yeah.
right? Let's put everybody out of work and see how that works.
And then just flood the market with money. Well, all I have to say is, and we could stop talking about and complaining, but the way that you see little news stories here and there, oh, they can't account for this many billions or this many
Right.
billions here or there. Like they have so many instances of them losing money or they can't account for where it was spent. If we could just get a grasp and a handle on that, there's so much money sloshing around, right? If we could
Right.
just get someone to be able to manage it, everyone would be doing well.
Yes, I think there'd be huge benefit, but
It's amazing.
and I think that's why, you don't hear anybody in Congress talking about it because they benefit. So you have and I think that's the one part of the market that is, and why Alicia and I are ranting about this, right? Is it's not just we ranting about it to rant, but that is a huge chunk of uncertainty for the market because bonds and the bond markets are so gigantic relative to equities at this point. It's such a big thing. So when, what happened to equities when interest rates were going up and everybody was going to have huge, losses on bond portfolios, right? Equities tanked because people all of a sudden, traders, whatever funds had to start raising money because all of a sudden, they don't get new higher rates. When you own a bond and you bought it 6 years ago for 0 interest,
Right.
you're not getting paid 5% now.
Right.
Everybody has to realize that you don't get the new money. You have your old money, and the value of your bonds in the market have gone down tremendously. So people have to understand now. Right now, basically, you have a huge transfer of payments to people who can afford to buy bonds, and they're getting a much bigger interest rate. And I think that might be part of, again, I would like to see more data on this, but I think that's part of the reason consumer spending is holding up because, as like retired persons, the boomers, right? And that generation retired, let's say they retired some bonds and now they're buying new ones, but now the new ones are paying a higher interest. All of a sudden they have, more money coming in. Maybe that money is going to kids, grandkids, whatever. And it's propping up some spending to kind of counteract inflation. So it's an odd transfer. Again, that's just a goofy theory I have, but that helps stocks. We saw a lot of retail stocks like Walmart and Target. All of a lot of these stocks kind of sort of ripping on sales. Somebody has to be buying that with some kind of cash. So,
well, consumer debt is also the highest ever too. So we do have that.
we do have that. So anyway, the same problems we've had 10 years ago and then 10 years before that. But I have to say, Clinton had delivered the best, like for the money spent in GDP growth. I think Clinton's been the winner in the last, at least in my lifetime, last 30, 40, 50 years.
Yeah.
A little longer than that, a little longer than 30, 40, 50 years. But anyway, but what that sets up is uncertainty, right? And we're in the business of kind of trying to gauge how much the debt uncertainty affects equities. And that's why we're going on this talk, because these numbers are coming out and it's not affecting everybody yet. But eventually, it could or would, it might skyrocket, rate. Who knows? And that's the who knows part is what adds to the volatility for equities and equity trading, which brings us to probably our next segment, which is let's look at the markets this morning with Leisha Leslie, the queen of the candles. I'm doing my best marketing.
When you say, I just want to say one more thing. When you say uncertainty, Andrew, as an retail options trader, and I look for opportunity, It's that change in trend in a stock in the market. And all it takes is one little iota of uncertainty and a trend will flip.
Right. Okay.
That's all it takes. The market hates uncertainty.
I agree. It's one of my favorite sayings. I don't know who invented it, but I think it's a good one.
That's all it takes. And that's what the Japanese candles tell you. I'll show you my SPX chart here. All it takes is a little uncertainty, and the candles show that in different patterns, and that's all it takes to say, okay, the market's going lower from here, it's going higher from here. So we had this major sell-off. Remember this last Friday? Big sell-off day. It looked so ugly. We closed on the lows, blew through my median line. Everyone was thinking we're going further to retesting this low. And then what do we get? A Harami candle, an inside day. And that means pregnant Japanese. And it means that, hold on, this trend is not going to continue. There's uncertainty. And sure enough, we reversed. And now we're trading higher than my resistance at 55.62. 55.62 on SPX is now new support.
Which feels kind of crazy.
Yes. So looks like we could try to head for these highs.
I think
56.50.
Well, I don't want to spoil what I think, but I will wait till the end of the show when we do our kind of market wrap up. But
okay.
And on last Friday, like I sold maybe 20% of my downside, meaning like I had like quite a bit of long VIX, a lot of put spreads. And I held 80% of it thinking, and this is what happens when you're trading, right? You're like, instead of taking and Friday would have been was a huge day at the end of the day, like all my marks, right? And this is what happens when you think though. You're like, oh, today's huge, but you know what? Monday's going to be even bigger.
Well, it looked like we were going to hell on a handbasket.
It totally, and I held a bunch. I took some off, but and then we got like the miracle bailout, and then I did sell 85% of what I had.
Very
what was
good.
It, yesterday or the day before? If you look at that crazy wick down there, Alicia.
Yes, this was Wednesday.
We got almost to that level, then I'm like, okay, I'm not going to be fooled again.
Yeah.
And I do have a little trick for people. I'm going to talk about VIX in a little bit after we go through your charts. But that I find helpful when the markets look like this. But anyway, that was the opportunity, and then I didn't mess that one up, thankfully.
Wouldn't you agree, Andrew, if you're in a position and you're trying to decide, a good way to just do half?
Yep.
Do half. Sell half.
Yeah, you can't screw up doing half.
Right.
Because
that's a very good rule of thumb.
At least you're half right. And that half would have been, I would have been able to live with myself a little easier, I think. But
in general, that's a good rule of thumb. Your questioning is, do I get out here? Do half.
Right. Half is a great thing. So that's why trading with 2 contracts instead of 1, if you can, believe me, I had a little to go, but anyway.
So on my
I got bailed out somewhat though on Tuesday, which was nice.
That's good. Yes. Oops. What's going on? I do have a little bit of resistance here, right just above on ES 56.23. They're just trading right just over 56 right now. So we need to watch for that. That's the ES futures.
Okay.
On the Qs, where's my?
Yeah, I'm having trouble. I can't get any live vol data up this morning. I don't know why. I think I'm gonna have to reboot my computer after our class. So
it's only sometimes that it lags. I don't know. So I thought we were higher earlier. I know IWM. So Qs look like they're unchanged right now. I do have this resistance will now be some support 472.60. Did something come? I don't think we had anything. Oh, we had import-export prices.
Yeah, that shouldn't be too big. Do we have a little move in
No, I don't think so. So SPX up a little bit, 11. Q's unchanged. IWM is up too,
okay.
which is good for me. Let's look at bonds, Andrew, since you talked about bonds
That's
and
the next
interest
thing I would
rates.
look at. So we have a little bit of resistance coming. ES, we're kind of pressing up against that, which makes sense. Like it's almost perfectly timed right into the FOMC next week. Everything's
Right,
sitting there like, hanging on the edge.
right. And we may not do anything till Wednesday, right?
Right.
So on the 10-year, I have them kind of just flagging here with support, looking like they want to take another leg higher. And TLT, hard to say. This could be a change in trend candle, a shooting star. With confirmation yesterday, they may want to pull back down to 98.87.
So
Hard to say
now
there.
that's another interesting thing there with TLT. So TLT softening with the market rallying again, that's looking at higher rates again, isn't it?
Well, yes, but the Fed is supposedly cutting a quarter, right?
Right. So why, I guess that announcement that we're spending $1 trillion in interest, which is hard to believe. Like I think even 5 years ago, that bill was 100 billion, 200 billion, something like that.
It's up 30% just in a year.
Yeah.
That's bad. I mean, that's scary. Imagine your credit card bills being like that and
Yeah.
sleeping at night. You couldn't do it.
That's why obviously the next president is going to inherit a kettle, and I think just having some responsibility on this would be nice. But again, you and I can agree on this till we're blue in the face. But
You're right.
the fact that treasuries kind of did the reverse into an expectation of lower rates, again, this is part of that like underlying uncertainty, right? We're very close to all-time highs, but VIX is nowhere near as low as it should be. So I was going to cover that after you, or make it your last chart, I guess.
Yeah, we can do that. I just want to show you, look at how well gold has held that. Isn't that amazing?
Yeah.
And now popping higher. Gold is making all-time highs.
So if you're looking at this as a signal, like is anything, it doesn't feel like anything's really breaking that trend, right? So no matter what anybody says,
the trend is your friend.
Gold is still going up. And to me, that's ultimately the price signal.
This is a perfect example of that phrase. The trend is your friend. Do not buck the trend. You will be burned. Right?
Yeah.
So now, 25.60 on the futures is support. They're heading to, according to the pitchfork, another 180 points, 26.5.
Well, I think again, it did not help. And look at how gold has rallied after even the debate, right? Look at those two candles there since the debate, right?
Yeah.
Nobody's mentioning the elephant in the room. So what does gold do? They buy it.
Yep. Lastly, I want to talk about crude because it has just gotten pounded. Pounded. It is trying to recover the last 3 days. It held my support at 67. As soon as it pops up here. But it needs to clear these previous highs before rallying up here, 72. You need to clear these. This is going to be a little resistance here, 70.37. But yeah, I mean, crude is just, especially this last week.
And I think last week, a big part of that is, there was such an oil shock when the Russians invaded Ukraine, right? And everybody rushed. Like all of a sudden, this policy of less production, people realized, wow, we could have a
Yeah,
problem. And then everything is reversed. And now it's, a couple years later, everything is a lag. And now all of a sudden there's a lot more production, I think, coming online. And, and I think rightly so, but what does that do to the price of, oil?
right,
And we're kind of sitting here while it tries to find some equilibrium. But of course, who wants to cut production now?
right.
So we've seen this movie before with oil. So anyway, because a lot of like if you pull up a chart of like APA, which is a big
Patchy.
explorer, Apache. Like,
Wow.
yeah. I mean,
Look at
this is
that.
pretty huge
46.
fall there just because,
Halved.
somebody clearly is saying, hey, the exploration game is going to slow down a bit.
It's
Somebody's
halved in
getting
a
out.
year.
So anyway, it looks very falling knife-esque, at least right now.
Yeah,
Pays a good dividend, but who cares when your stock's down $10 after you buy it, So
right.
again, that's a stock I watch just because it's sensitive to that.
So you want to look at VIX before we talk about the grade 8?
Yeah, just a little.
Here's our curve.
Yeah, there's our curve. So there's a couple of weird things going on. One is so we only have a week to go with the September future at the cash, which is not hugely unusual. Normally though, when you have a little bit lower volatility in the short term, VIX is going to be, could be, Russell has his rule, right? If there's more than $1 of contango in the futures, meaning that future is higher than the cash by $1, you kind of want to lean into puts because short-term volatility is so low, right? The market, like the VIX curve is just a reflection of volatility in different terms. And so right now, just as we come into, VIX is basically almost about to sit on October expiration. Like it's getting very close to that, right? It'll be right there
Right.
on September expiration. So that there's not a lot of, there's a little bit more in the short-term vol than I say there normally would be. Going to all-time highs or close to all-time highs, the curve hardly ever looks flat in the front. So this is very odd overall as a setup for volatility to be 16 with SPX only 1 day away from all-time highs as far as pricing goes.
Right.
So it's a very odd setup. I think part of, most of it is because the market is looking for that 25-point rate cut. The ECB's cut twice. And the thing is, if they get it, does that launch us to a new level?
I don't know. I don't,
And I think
in the past it always has, but I think this time could be different, quite honestly.
So, but either way, the market is looking for a 100-point move out of SPX, pretty much within 1 to 2 days after the number. And I think that's where we are. So VIX it looks odd for as high as we are.
Yeah.
And again, you have when the economy is so wrapped up in what happens, or the market is so wrapped up in everything the Fed does, just by definition, the Fed is way too involved in trying to micromanage things.
Oh my goodness. They've
been, it's hard to imagine really that all their help has really been that useful in just letting the market clear every once in a while.
Well, that's what I've been trying to say. Why are they doing anything? Don't we need some time? I mean, it's a giant, it's a giant thing. You can't just be back and forth in such a short period of time.
Yeah. So I think we're going to see
common sense.
Yeah, I think we're going to see more volatility than people think next week after the number. So you could have that blast up and then
Yeah,
then run full like crazy underneath.
I think everyone and their mother thinks that, oh, looser policy, we're going to rally. We got to rally. We always rally, right?
Right.
And I'm afraid that this time it's not going to be that way. It's like they're doing it too soon, they're just not, like you say, let things pan out, let it breathe. And yeah, I think we're going to get a different reaction than we usually do. Real quick, before we stop talking, can you repeat that rule of thumb for everyone? Andrew, that's a really good thing. The 1 point on the VIX.
Oh, okay. Yeah. So the general rule I have there is when you have a point of contango. Now, I did not invent this rule. Russell did a presentation for us, and Russell Rhodes, Dr. VIX.
Yeah.
But he does a lot of research. So like when the VIX is like this, what happens afterward a lot of the time. So when you have 1 point of contango with a week to go, that's generally a good time to buy VIX puts. So a 1 point of contango would be right now with this market. So the future's trading what, 1693 or something, Leisha?
Yes. Yes. Right here. Yes.
So that means VIX cash would be 1593. So don't forget, when you're trading VIX options, the future price is the thing that's the underlying price. VIX cash is the target that the futures go to expiration. It's not the other way around. So as expiration comes, that future moves down to the cash. So why do you buy puts when there's 1 point of contango? Well, the higher the underlying price is, the cheaper puts are, right? So if you think about it, the underlying price goes up, the same strike put is going to keep going down and down and down in price. Now, because of gravity, right? Volatility starting to come back, I get to normalize. That future will come all the way down to the cash by expiration, and then your puts do very well. But that's also a sign of lower vol expectation. But liquidity providers are pricing things based on supply and demand, and the reason why the VIX cash is low relative to the future is because all those short-term vols are much lower. So if the vols are lower, market participants are expecting less activity overall. So all you're trying to do is ride the activity that everybody is already seeing. And that's how the market prices that.
And real quick, contango backwardation, just so everybody's clear. Real quick.
Oh, sure. Do you want to put that chart back up again?
Yep.
Okay. So this right now is essentially contango, where you have the left side of the future, the near term, is much lower or lower than all the terms in the back. The reason why we have that kind of hunchback of Notre Dame thing going on in October is because of election uncertainty. So the market is pricing that OCNOV to reflect, what we think about it. Although it seems like that has softened a little bit lately.
It has.
That curve. But that's what it is. December is usually always lower seasonality because of all the holidays, right? So every time we have holidays, that's the market will show that as lower vol. So that part is pretty normal. The OCNOV is because of the holiday, and that's contango. Backwardation is when everything is the opposite. So VIX is much higher than the futures. So that green line, Leisha, would be all the way up and over all the future prices.
Right.
And then, and you know what a good example of that is? If you hit historical prices, that green thing, and then there you go. Okay. Now here, this is, I think, this is a crash day, I believe. This is October 2008.
16th, 2008.
Yeah. And I think the VIX cash line was like way up there. It's like 40 or 45. So, and this is the opposite, where Now, all the volatilities in the short term are super high because people are flipping out and the market is just, in general, this is a more bullish VIX signal because volatility is high, and it's high because the market is moving at a very high rate, very high realized vol. And this is the opposite. So it's literally like, it's the opposite sides of the same coin. So
Okay.
backwardation, you don't have that goodie. And my rule in backwardation is different than contango, right? Backwardation can last a lot longer than you think, right? Because now all the futures are rising to the cash. So what happens to volatility puts if the underlying price keeps going up every day, right? Your vol puts go to die. So you have to be careful about trying to pick a top in volatility because,
It can
so
go
a lot
higher.
of time, right, that daily decay and everything can be quite, trust me, fierce.
Yeah.
You buy puts and you're like, oh, this vol will come down. But if it doesn't come down in 2 weeks, 3 weeks, then all your puts are dying because VIX is still hanging up there at a relatively high level and the futures go up to it.
Which leads me to another very good rule. Once you've made your decision on a direction of a stock, VIX, whatever it may be, always wait for the confirmation. Always wait for the price to reveal itself that it's beginning to move in your direction. Don't hop in too early, you'll get killed.
Right.
Wait for it to show you and reveal itself that it is going in your direction before hopping in. Right?
It's like selling vol. You don't want to sell vol into the upticks.
Right. You got to wait until it comes back.
It's a better sale after it has peaked and started going down. You got a little bit more room because in order for vol now to make a new high, for volatility VIX to make a new high, whatever the situation is has to get worse, basically, than it is, which is a lot harder. Sorry. I will turn that off.
Okay. Is it time?
What time is it? Oh, it's 9:04. Yeah.
It's time. And I don't have the
Well,
introduction that
I
Martha
would
gave
say,
us,
so
but
Alicia, you've been traveling a lot lately, right?
yes.
So going from Florida and Florida, Texas, Arkansas, Chicago.
Yeah.
Um,
Those are our
that's a
main
lot.
stops.
So what's been your favorite vehicle to?
We are driving in our car, Andrew, in our vehicle. Show
Oh,
us your vehicle.
oh my gosh. Oh my gosh. All right. If you could, Louis, put up that slide because live all for me is dead and I'm going to have to reboot my computer, which I can't do now. At least I have a slide. Okay. Here is my vehicle for the day. I've come back and forth to this stock just because it's kind of fun to trade. This is Robinhood. And I wanted to show you a couple things that make it interesting. One, you had like a gift when we had that August 5th thing. I think the stock was down below 14 bucks. That clearly is past, but it rallied strongly out of that and kind of peaked at around 20. We had again the swoon, now showing a lot of strength. I'll be curious to ask Leisha after this to have her comment on what the candles look like. But I think it's basically going back to 25. That's the short answer. Aggressively gathering assets. And don't forget, they have a lot of cash also on their balance sheet still. So becoming a profitable company. Now, the next part is from an evaluation point of view, that red line is 30-day volatility. So, if you're new to trading options, when do you kind of buy vol, when do you sort of sell vol? It's not always black and white. Just because the vol is high, doesn't mean you necessarily sell it. Because the vol is low, you necessarily buy it. But what I included there is the 90-day realized vol, which is the sort of the average volatility close to close of the last 90 days. Hood has been able to maintain like pretty solid vol. Now, granted, you had that huge drop. So the stock basically lost, I don't know, 35% of its value and then slowly recovered back in this period of time. But you do have, I want to show you what happens like more locally, meaning very short term. So when you look at something like Hood right now, I want you to notice that the stock was just like $19 3 days ago and is now trading 21, what is it, 21.80 something. So you've had almost a 3-day move. Sorry, a 3-point move in 3 days. So what I take that as is like, okay, I now have this move that we've just had. So, and this is something like Alicia was talking about candles. Like, there's a reason things move the way they do, right? The reason any of these huge candles, someone's buying the stock. I'm not trying to make it, overcomplicated here, but there's interest in the stock. There's a reason why it moves. So you now have at least a $3 range in 3 days. Now, the thing is, what if you could buy a $3 range for 30 days, right? How much would that cost, or even longer? So the October, so you can buy a $3 strangle, like the 22.19 strangle is less than $2 in October. So I'm not buying 3 days for $3. I'm buying, more like 35, 40 days for $3. So the vehicle here is just buy a strangle, right? You have relatively inexpensive options to how the stock has just moved recently. So what it does is it gives you the ability. One is, I don't like buying calls and being stopped out. So what I prefer to do is, because any stop, right? But I don't want to lose all my money buying the calls either. So you have a choice. You can size your position. So if they go to zero, it's a fraction of your account and you can live with it. All right. It still kind of bothers me having options go to zero. Or you can stop, like you're down 30% and then you kill it and then you watch the stock go back up again and then you're feeling not great. But that's what it is. That's the discipline you have. And then third, if you just buy a strangle, basically what you're saying is you're setting up how much you will lose in the call before your puts start to pay you, right? And if the stock does something weird, totally the opposite of what you think, at least you're breaking even on the whole thing because your put on the strangle pays for your calls. But what it does is it affords you time, 1 to 2 weeks in your trade, and let the upside go if it goes. Now, again, because what you're just basically doing is you're accepting the fact that put is kind of where what you would stop your option for, is how I think about it. So if you're going to say, if I'm going to buy the calls, I think are around $1.30, the 22s, or $1.25. So I'm thinking, okay, I would risk maybe 40 cents on those before I'm just totally wrong. Okay, so I'm going to spend that 40 cents on a put. Now, the stock totally tanks and goes back to 19. That put will now be worth more, at least what the strangle is worth, or very close to it. So your loss there maybe might only be a dime or 15 cents. Totally, you can live with that as a trade. But if we make those highs that we were, like to 25, now you maybe have 2-3x the value of your strangle. And you actually have a trade now with a much better risk reward. So you've changed the risk reward on your trade to like 5-1 or 8-1 risk reward, which that is a much better way to trade long contracts, in my view. I don't want a 1-1 or anything like that. I want more like 5 to 8-1 setup that looks much better. And, and if we have, one thing you notice with, Robinhood, like look at that move from the lows, you basically had a 10-day rally, 2.5, 3 weeks. So if it decides to rally to the highs that we just had, which were very close to 25, you'd have a pretty decent trade. And again, there is some volatility in the name. So when it's moving, and I'm just using the short-term action that we've had. So, it looks to me like from a pricing point of view, the options are relatively inexpensive, and we have a move, a potential move where the risk reward looks really good. And that's my Vehicle for today.
Andrew, real quick, let's look at my chart, the pitchfork.
Yep.
Yesterday, you just barely, but you did clear and close above that previous high. So, Andrew, I'm thinking 23 on Hood
Oh,
up
good.
here. Yeah, and maybe even higher. Looks like a very nice ascending pitchfork. Looks bullish to me.
Yeah, all of a sudden they wanted it. Looks like that's what actually, you know, I keep a list of stocks. You look at your stocks, then all of a sudden it does something. You're like, woo, you know. I like it. I like that. That's a good thing. Now we were going to try to wrap up. Can we do like rapid fire great 8 in 2 minutes?
Oh, I don't know about that. What do you think? Should we save it for next week?
Why don't we save it for next week? Because we only have a few minutes while we wrap up. How are our markets? Because again, I don't have any data right now. How do the markets look here, like pre-open?
SPY's up 10 or about a point. So SPX is up 10.
Okay. Now, do you feel like we're going to have more of that meander up today?
I think we can start out that way. I know IWM is starting out that way. We may, reach the 56. This could be a good magnet right here. 56.42. But whether we end up there and people go long overnight, that's the question, right? At the end of the day.
Right. Well, I think what we're
Hard to
going to
say.
have.
This is very bullish, though.
I think so too. Like it's amazing how fast that everyone forgets about any news that was dragging the market down. You know, okay, we had those unemployment numbers were not great, or the employment numbers weren't that good. All of a sudden, nobody cares because no other news comes out.
Well, no one cares because the Fed's still doing what they want to do, even though it doesn't match what their criteria.
I have one chart that I want you to look at of the Great 8.
Sure.
We added AVGO. I'd like you to take a look at that one because that has bounced like a rubber biscuit after the earnings kind of sell off.
A rubber biscuit.
Yeah.
Let's go. Come on. Trading view slow. There we go. Oh, yes. Very bullish. Wow. That thing has gone 130. It's up $30.
It's a huge move, right?
$30 in 4 days.
Yeah, earnings came out. The earnings, like we said, they were good, but they weren't that, the analyst that has the crazy number. They didn't hit the crazy number, but they were very solid. And then all of a sudden now you're sitting at the top of another number for you.
Yeah.
Right?
So this resistance is already trading above there today. 164.5 will be your new support, and there'll be resistance going up into this previous pitchfork 169.25. But above there, the previous high 172.80, and then above there 179.30. So yeah, very bullish.
It's got
very
some
bullish.
room. I was, and what's the worst part is like, okay, it was pulling back. I probably should add a little of this, right? Because I've been doing that with like Qualcomm and MU and just all those stocks when they've pulled way back on their highs. And I'm like, okay, and then I like blink, and I swear, like I blink and the stock is up here. I'm like, oh, now I'm just like, all right, now what? I'll sell it down 140 put for $1 or something, and maybe.
Okay. Yeah, that was a major league move for sure.
Yeah. Okay. So as we come to the end, I just wanted people to see that. So you've kind of given your prognostication for the day, but we got to end the show with where we think we're going to end the day, because that's what we normally do. So what are you feeling? What are you feeling for SPX?
I say we end up 20. How about that? I'm just throwing it out there.
I'm of the same mind. It's like, okay, it's a Friday. The trend has been strong. So, I mean, I'm going to guess a little more, maybe 1/2 to 3/4 of a point again, as everybody. And it's going to be that tiptoe thing. Probably not going to get very much response from VIX. So if you're looking to make a lot of money, today on your vol puts and stuff like that. I don't see that. It would surprise me hugely, but that would not likely come until the last maybe 2 hours of the day, where they kind of take the weekend out a little bit harder than they have. Again, that will depress VIX cash. I don't know you're going to get a lot out of the futures, though. I don't think we see a big vol drop until after the number next week, Thursday, Friday.
The number, the interest rate, the Fed, it's like the biggest thing for the market.
It's terrible.
It
used to
ridiculous.
Be like, you used to like, oh, this is a business. This is a sector that's doing great, and you would write that. Now you're just like, you're lotto ticketing SPX and SP. Anyway, but we are running up against it. And I guess, do you want to do the outro or do you want me to do the outro, Alicia?
I'll let you do it.
All right. So
I'm not theatrical.
For Mark, who is not here, your only option, he wishes you well. For Alicia, Queen of the Candles, the Duchess of Doge, from one of her many locations, she wishes you a good weekend. And I, Andrew the Vicar of All, wish you an excellent weekend and happy trading. Take care, everybody. Bye-bye.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.